Okay, guys, let's get started. Today is Fed Day, and what that means is that there's usually some movement in the markets on Fed Day, possibly a good trade or some good opportunity for day trading, and also just important to understand in when it comes to swing trading, you need to understand what the Fed's doing and how the markets. Really, it's more how the market's perceiving what the Fed's saying, not so much what they're saying. You know, we all know the Fed is going to come out and say that they're going to keep rates low forever, basically, and they're going to be there to support the market. They're not going to change their tune. They've already pretty much shown their hand on what they're going to do when it comes to supporting the markets. But it really comes down to how does the market perceive what they're saying. One thing to understand, I think that's important, and then we'll get into these charts, is, during recessions or bear markets, the Fed is always there to support those in many different ways. You look back at every single time stocks have sold off, you'll see that the Fed has cut rates, throughout those sell-offs. They've cut rates down to, historically they go from, about 5 percentage points, and they cut rates. Now they don't have rates anymore. So what they do now is quantitative easing. They do money printing. So that still has about the same effect on to provide stimulus as cutting rates. If you have rates at 5% and you go to 0 pretty quickly, that's going to provide a lot of stimulus. Well, if you don't have that and you do a bunch of money printing, it kind of provides the same stimulus. How's the market react to what they say is the important thing to notice. The Fed, the point I'm trying to make is, even though the Fed will be there to support markets, it doesn't mean the markets are going to just constantly go up because the Fed can stop a bear market or stop a recession. That's, I think, the important thing to note, that in the past, when there's been sell-offs and recessions, the Fed's been there to stimulate, to support those sell-offs as well. They don't necessarily stop the sell-off. They're just there to mitigate the damage. And I think that's probably the same case that we have right now. So let's watch what they say, see how the market treats it. Let's get into it. We're going to look today at gold stocks and the dollar, because we're going to start off with those because these are very important. And these are the movers usually on Fed Day. The Fed has the power to move the dollar around a lot. And so here's the dollar chart. What do we have going on? Well, on the hourly, we have this downward channel that we broke above. We back tested it. As I zoom in, we broke above it here. Did a back test. Didn't fully back test, but close enough. And then we've just been going sideways. So I think the dollar's been waiting for the Fed, which is today. So, probably moving day in the dollar. Do we break down or do we break up? Now watch for, a lot of the time when the Fed announces, we'll just move our line right there. A lot of the time when the Fed announces, you'll get kind of the initial reaction, and then you'll get the real reaction. So perhaps the dollar, there's a lot of things that can happen. I think the dollar, gut feeling, my opinion, dollar is heading up to 95 up here. This is where I think the dollar's heading. However, we could come down and tag this trend line here, do a back test right after the Fed announces, and then work our way higher. That's possible too. If I had to guess, I think the dollar moves higher. That's really, the guess. And again, it's just a guess, but it's based on the charts. We also, if I look at this here, you can see we have positive divergence right there. And it's not fully positive because we have been making lower highs, higher lows right here. So you're not fully diverging. Diverging is usually when you want to see like a lower price with a higher momentum, and we're making higher momentum, and the prices are about even right here, slightly higher. So they're kind of confirming the price action. But again, I think we're heading up. Let's look at gold. Or we'll look at the weekly as well. on the dollar before I move off this. And again, you can see we broke down. Now, the two things, we could be flagging. This could be a bear flag right here that we're making. And, maybe we'll know today. But you can see here on the weekly, we've got this nice impulsive drop. We've been flagging out right here. And maybe the dollar's setting up for another impulsive drop to the downside. Maybe something down, down around this. You can see 89 level. We've got some support right there. So maybe that's what the dollar wants to do before doing a back test. But, if I had to guess, we saw a nice impulsive drop through this green support line right here. And I think that a back test is in order. Typically, when you break through levels, you're going to come back and back test that at some point in time. So I think that's what the dollar wants to do. That's my guess and read on the charts. Here's gold bullion. So gold, if I go to the hourly, here's where I've got my trend lines now. I think this is the best fit I can make with the information that I have as of right now. We've got this asymmetrical triangle, which is you can see price action is compressing. It's, the swings are getting smaller and smaller as we get tighter and tighter. And we're pretty much at the apex of the triangle, which means we should have a breakout or a breakdown. We're up near the highs here, but the Fed could obviously foil that. We could break down, and if the dollar moves higher, gold will probably move lower. Going back to the gold, the gold chart really is kind of the inverse of the dollar. We had a breakout above major resistance right here. Here's the resistance on the weekly chart going back to 2011, 2012, 13 range. So that's where we were capped at the end of that last bull market. And then we entered a bear market for 6-7 years right here. And this was a nice clean rounding bottom accumulation pattern. So this is basically, a big accumulation pattern where people are building positions. And then we had the breakout, the break higher and the start of the new bull market. So this is your resistance, 1790, basically going back here on the weekly chart. We broke above it pretty impulsively. Nice, look at, those are some big weekly candles. And we've just been flagging out right here. Looks like it wants, what I see right here, obviously, to me, it looks like a bull flag. That's what this looks like. However, the dollar gives me pause here because the dollar has broken down, but it's not, continuing to break down. It's kind of hanging out, working its way higher. So the dollar looks like it wants to do a back test. And I think if that happens, gold's going to come down and tag this 1790, support level. There should be major support there. And obviously this is a bull market. So when you're in a bull market, you want to buy on support. But we're not on support right now. So 1790 is the level that I see as kind of major support. We could undercut it maybe down to 1760, 1750, but somewhere right in there should be some major buying. Okay, Barrick Gold. So this is one of my favorite gold miners, and I haven't spoken about Barrick for a while, and that's just because Barrick has kind of been sideways for many weeks. You can see, so I rode, I've been in Barrick for a long time, or, I'd been buying it for a long time. I was buying Barrick all the way back here, telling everyone in almost all my videos that this looks like a great trade. I bought Barrick right here, right along support, around $10. It shot up about, 180%. We had this big liquidation event right here back in March, and I said that looks like for selling, and I'm going to be buying that. And I was adding to Barrick right here down at support, and sure enough, that was a great trade. Now it's just been sideways, and you can see that it's over the last few weeks it's just been consolidating along support. So it's either building support, ready to make the next move higher, or it's going to break down. And I don't have a good read on this one as of right now, so I'm going to just watch the dollar and gold bullion for my tell on these. Agnico Eagle, looking at the hourly here, So this is the trend line that I have marked out, and it's been holding above this trend line right here. You can see we've kind of ramped up. We've been trading above this trend line. Came back almost for a dip below here to tag support, but didn't quite get there. And just been holding up here, so marching higher over time. Again, I don't have a great read on this one either. The dollar and gold are going to be my tell. You know, this one, you've got some all-time highs right here at, mark that out, at about 87.90. And you can see here on the daily, we overshot that briefly, but it closed back below and has sold. So that held as resistance. If we break back above that, we should hold. If we break back above that, a close above that would be pretty bullish, and I'd look for this thing to continue to run higher. This is another reason why I think gold is probably due for a pullback. GLD, this is going on from the March lows on the daily chart. You can see we have an uptrend. Nice, lots of reactions right in here. Reactions here, and then we broke. We did a back test, so here's your breakdown right here. We did a back test right there. And kind of drifting up for another back test. But again, we've already had a back test, so they could pop it up and do another back test around 186.60, or it could fail here. It's already had one back test, so higher probability now that you've had a back test that it could fail. But the major point to take away is it's below trend. Here's your trend. It's below the trend. To me, this looks like it's going lower. Pan American Silver. So this one, same thing. Here's your trend from March, really all of 2020. We broke trend here. Nice impulsive breakdown too. You can see we broke, gap down, and it's just been kind of working its way higher, but pretty shallow bounce action. You know, here's the breakdown was a drop of, you know, from the high down to the low of 20%, and it's only recovered, you know, from now to the high right there, 16%. So, you know, not quite half of that basically, but, you know, from a 39 to a 31 dollar drop up to 30, a little bit more than half, but still pretty shallow recovery, and just keeps getting rejected right here at this hourly. I've watched this thing, and there's some resistance that I have marked out. They keep popping it, but it keeps getting rejected. So we could maybe even, now that we have two reactions up here, we could mark this one out just for benefit of the doubt. But, you know, again, I think it heads lower. It probably tags this 26 level, or at least this 30-50 level. You got a gap right here. So probably find a bounce. We'll probably get a bounce right there. GDXJ, so I don't look at this one too often. I prefer the major gold miners over the juniors, but I'll grab positions in juniors. They're more investing tools for me. But here's JDX or GDXJ, junior ETF. Uptrend here on the hourly, going back to March. So here's your uptrend. We broke the uptrend with a nice gap down, did a full back test, and now we're just chopping sideways. So to me, yeah, we could go up and do another back test, or we could break down. But if we're going to go up and do another back test, you don't have the trend in your favor. This is when you'd want to be bullish, when you're in an uptrend and everything looks good. When you've broken trend, yes, now it's more, you know, higher probability that you're going to break down because you've broken trend. Yes, it can do another back test and go higher, but the probability says that you're going to break down. So that's what I see on this one. But longer term, you know, if this is just an hourly chart going back to March, you look at the longer term stuff, the juniors actually haven't had that great of a, you know, I mean, they had a really impulsive rally, but they don't have a very constructive bull market trend. So we'll have to watch that. You could maybe say something like this is the bull market trend in the juniors. It doesn't chart that great. You know, and I mark this out because I'm throwing out all this price action in March, which was the big liquidation event, forced selling. And so maybe it's something like that. I don't know. in general, in the short term, I think it looks like it wants to come down, but again, could be flagging. This could be a bull flag. So, my read on these aren't, I'm not extremely confident on my read on these, so I just want to put that out there. This is just what I see. The dollar is something I'm really watching close because that would give you a good tell. Okay, let's move over to tech stocks. We did the gold ones first. All right, Qs, same thing. Trend is broken here. There's your trend. Trend's broken. We're just kind of chopping around. So what does the Fed do? Do we pop it up and do a back test on the Fed, or does it roll over and start the downturn based on the Fed? Could go either way. But the point is, even if you do a back test, that's an area to short. So we don't have, people have been saying in the comments that we're in a bull trend, buy at support. Okay, where's support? I see on the hourly here that we've broken support, cleanly broken it for several, weeks basically, or several days at least. We can go to the daily. Yeah, a week and a half or so, we've broken support. So where's support? That's fine if you want to buy in support, but I don't see support till we're down here around 221. That goes back to the bull market lows of 2009. Here's 2009 lows. Here's your weekly reaction 1 on the weekly. There's another one. There's another one. Here's a chop through reaction based on the Fed recovery. There's another reaction. There's another reaction. Here's another chop through reaction with the Fed saved the market again. So that's where I see support. So you want to buy in support for a bull market, continuation of the bull market, that's fine. That would make sense down here, but that's about 20%, 18%, depending on when we get there. Up here, I don't see support. We had support, but that support clearly is broken here on the hourly chart. You can see it. So that's my read. And they're selling Apple into the Fed, prior to the Fed. So here's the one thing I think it's important to realize. Apple, here's your uptrend in Apple. We broke that. This is a daily chart. Here's the breakdown, kickback rally. They're selling it. Yeah, we could have another kickback rally and, recover some of that. But we're still below trend here. And if you go to the hourly, you can see they're smashing Apple again today. So Apple, every time it's popped, they've sold it off. And we're continuing to, if you want to mark this out as a pattern, this is a bear flag. Here's your bear flagpole. And then you're making some kind of a flag like this. And, this sets up for a continuation breakdown, something like that. There's a gap right there, so I think that's probably the target right there at about 96.75, somewhere right around there. And for where we're at now, that is a 15% drop. So that looks like a logical target for the, this next move in tech stocks and Apple. And Nvidia, I took this one short yesterday. I grabbed it. And here's what I like about this one. This one is, if you go to the daily, has a bearish rising wedge. And we broke to the upside. That's very low probability that upside move, that there's going to be a continuation of that upside move. And sure enough, it failed. And the reason why it's a low probability is this is a bearish pattern. Bearish rising wedges typically resolve to the downside. So when you move to the upside, oftentimes that's a kind of a whipsaw, bull trap move. And that's what it's been so far. So anybody who bought this, breakout, has been trapped so far. And we keep rejecting resistance. If I go to the hourly here, we're below resistance here. They keep popping above it and it sells off. You can see here, even right here, they popped above it or recovered it, sold off. Popped above it, it sold off. Popped above it, it sold off. Did it again. 4 times it's popped above the resistance and it's sold off. So to me, that's pretty bearish. And I think we're going to, first move 488, gap fill, and then ultimately breaking the lows here of this 468 and heading lower basically. We do have a gap here that was not filled, and it's right there at about 463. So I think we'll probably get a reaction there. And then we have another level right down here at about, give or take, yeah, it's right about there, 432. So those will be some targets that I'll put out there. Again, everything in this video is just my opinion. That's all I got today. Just want to look at, these gold stocks. It's Fed day. So if anything major happens, we get some sort of major price action or pattern, breakdowns, I'll put out a video at the end of the day. Otherwise, catch you guys on the next one.